Hi, it's Stephen with Jacksonville Real Estate News here. Just wishing you a happy and wonderful Friday. Today, we are going to get into the news and notes here in Jacksonville and how it affects you looking into real estate, whether you're buying or selling, no matter what you're doing. You are here for the weekly, I guess it's weekly update of the news and notes of everything that's going on in the Jacksonville real estate market. So today, we're going to get into a few different things here. We're going to talk about the Fed, how they increased the benchmark interest rate. We are going to talk about new construction. Yeah, new construction. We're going to get into that and some things that are going on with permits in new construction. Very interesting. At least I find it interesting. Hopefully you do too, but that's why, I'm sending it across on news and notes. If you don't find it interesting, just leave a comment below. Say we didn't like that. We'll do something different next time. And then finally, most important, maybe not most important, but something that I think a lot of people are going to want to know is what's going on with the interest rates? Are they up? Are they down? Who knows? Well, actually, I do know. So that's why we're talking about it. So let's get into it. Once again, first and foremost, we're going to get into what the Fed's doing. You probably heard this. You probably saw it of, the Fed increased rates, this, that, and the other. Yeah. What's going on with banks? Yeah, we'll talk a little bit about the banks too. So here we go. So we have got right here going through everything. The Fed raises interest rates 1/4 point. Yep, they're jacking up the interest rates again. What does that mean for you? What does that mean for the economy? What does that mean for buying a house? So really what this means, as we're looking at it all, is that the Federal Reserve extended its year-long fight against high inflation Wednesday by raising the key interest rate 1/4 point, despite its concern of higher borrowing rates could worsen the turmoil that has gripped the banking system. So if you don't know what has happened within the past couple weeks of the banking system, there was a bank in Silicon Valley Bank and then a couple other small regional banks that the Fed had to take over. The reason they had to take that over is because Silicon Valley Bank was not doing good stuff. They weren't doing anything illegal. They just didn't run their bank very well. They were taking out long-term loans and people wanted quick returns. So they ran out of money. They went illiquid. So the feds had to go in and do that. A lot of people are very concerned about the banking industry, of what's going to happen with it, et cetera, et cetera. Me personally, I've read a bunch of stuff on it. I am in no way, shape, or form a financial expert. But this does kind of affect my job. Everything that I have seen in the marketplace is showing that it's really just a couple banks here or there that are just not doing a good job being a bank. So what does that look like long term? We don't yet know, but let's read some more here to see what we can find. Next line. The U.S. banking system is sound and resilient, said the Fed in a statement after its latest policy meeting was held. We were going at the same time. The Fed warned that the financial upheaval stemmed from the collapse of two major banks is likely a result of tighter credit conditions and weigh on economic activity. So the central bank also said that it's likely that they're nearing the end of the aggressive streak of rate hikes. Look at that. We like that. We like that a lot. You know what that's going to mean? Well, we'll talk about that in a couple more articles when we get to what the mortgage rate is doing right now and what it's doing for you. So just remember that. The aggressive streak of rate hikes. Read in between the lines. I don't think they're going to be doing much rate hikes anymore. Just my thought. You think about what you want to think about with that. But that's my thought and opinion. So there we go. The process of getting inflation back down to 2% is a long way, and it's been bumpy. Yeah, we've all felt that. Thank you, Chairman Jerome Powell. That's a very obvious statement. Well done. Coming down here a little bit more, we are looking, there's some things going on overseas where Credit Suisse was taken over by UBS. That's kind of a big deal. It might not be a big deal here if you're not into that kind of insight or financial game, but that's a big deal that's happening. But we've got other things that coming down here all the way to the bottom. And this is kind of what I wanted to get into. In the U.S., and these are just good information, because What we ran into in 2008 was that we had a big issue with unemployment was already really high. Right now, we're not really seeing that. Here in Northeast, this is saying at the U.S., 3.4 to 3.6. That's great. Yeah, that's great. Here in Northeast Florida, representing the Jacksonville, man, we're down below 3 in unemployment. So the economy is still very, very strong. There's still a lot of things that are popping up saying, hey, people need new jobs, et cetera, but the economy is very strong right now. So that's what we're starting to see and continue to see. So we need to be happy about that. Overall, the Fed did hike the rate a quarter point, but we're going to see what actually happened to the mortgage rates. And then I'm going to give you my prediction of what we're going to see coming up here shortly. On to our next article. Now we are talking about new construction. Yeah, new construction homes. What does that look like? What's happening with it? Well, let's get into it. Building permits for single-family homes of down and townhomes in Northeast Florida fell to 664 in February, the lowest since November. Right here, look at this. Look at that. The lowest since November 2019, according to Northeast Florida Builders Association. Yeah, let's just scroll down here. We're not going to read. We're going to, picture's worth 1,000 words. And if you ask anybody who knows me, I've got 1,000 words that I can talk, especially about real estate. So let's look at this. Coming in here, we've got January and February, 847, 664. Let's go 2022, and I'll scroll down just a little bit more. 2022, we're looking at 1,400 and 1,300. That is a big old freaking change. Do you see this? Look at what this looks like. That is a lot of changes in permits. Yeah, that's a lot. Even going back, I mean, in 2022, that's when they were coming off a very strong 2021. So if you come down here, you can see how these numbers getting into it. A strong 2021 in the fourth quarter. Q1 looked good. Theirs were dropping down. I mean, we even saw, I did some videos on this down here, how those were slowing down. So you can see that curve. That curve is just dropping, and it is dropping fast. Now, what is that going to mean for you? We're going to scroll down here a little bit more. This is going to give you kind of an insight of what we're looking at. Permits fell 22% from December and 50% compared to February 2022. It was the slowest February since 2015 when 407 permits were pulled. This is kind of damage control. And I'm not saying this to be mean to the guy, but this is what you're going to say. The drop when permitting was expected, as Jesse said, the builders have said that they were going to pull back this year. The applications that were submitted in November and December are now starting to be issued. So they're slowing down. The builders have said that. In 2022, there were only 2 months where the market dropped below 1,000, July and November. In February, 58 permits were pulled in Clay County, 194 in Duval, 95 in Nassau, and 317. This is a little interesting number right here. This one, why we're really getting into it, and you're seeing kind of slow in some of these Clay County, that's not surprising. Only seeing 58 new permits in Clay County. There's not a lot of new construction going on in Clay County. There's just not. Nassau, kind of surprising. There's a lot of wildlife stuff going on up there. Duval County, we still have things that are going in, but this one right here, this is standard. This is what we normally see. St. Johns County is growing. There are plans for St. Johns County all up and down 95, east and west, that's going to happen for a long time. So we're going to continue to see these numbers happen as we go on. Listen to this right here. I would expect that the year-to-year comparisons will continue to be lower for the next couple of months. So what does that mean for you as a home buyer of new construction here in Northeast Florida? Well, what that means is that with permits slowing down, we're seeing that they're just not building as much. But for you, especially, and hold on, we're going to get to what the mortgage rates are. I know everybody wants to see that, so just hold on a second for me. what's going to happen is that they're slowing down. There's going to be more competition to buy the house. They're going to be looking at you and saying, hey, we want you to come buy our new construction home. So they're going to be giving you a lot of different options of how to do that. So if you go back into the channel, you'll see some stuff about new construction and giving a lot of credits, a lot of builder credits, a lot of design room credits. We're going to buy down your interest rate. We're going to lock your interest rate. We're going to do this. We're going to throw in a kitchen sink. They're not. The kitchen sink is included already. It's just a joke. Come on. But actually, well, some people actually are. So there's a few builders who don't throw in appliances. So I know kitchen sink is an appliance, but just stick with me here, people. Come on. So they're doing a lot of those things to get your money. That's what they want. So we're going to see a lot more coming on of incentives for you as a home buyer to go and get new construction homes. So as permits go down, there might not be as many choices, but they're also not going to be building spec homes. So anything that they're going to build, they're going to have a contract for. Back when we were looking at 2022, man, they were just, let's crank these bad boys out. We're going to build spec homes. Somebody's going to buy them. Now, no, we can still get a good deal. We can still find something, but it's just not going to be the amount of inventory or, hey, I need a home. Is it done next week? That's not going to be there. So let's get into our next article. And for our third and final article that all of you have been wanting to see and read, and here we go, it's the mortgage rate has dropped to an average of 6.42%. Let's get into it. Last week, the average 30-year fixed rate mortgage averaged 6.6. It's the second weekly drop and a dash of hope for anxious spring homebuyers. Let me say this. I do not want you to be anxious about anything. If you are educated and you are empowered, then you are going to make the right decision for you and your family, no matter what the interest rate is. Now, with people saying, hey, is it time? Is it not time? Should we do it? Should we not? Let's read some more. So the average long-term fell for the second straight week, which combined with lowering home prices could give house hunters a break in the housing market and boost the spring buying season. We are seeing it right now. Here in Jacksonville, we are seeing more people come into the market because the interest rates are coming down and home prices are starting to come down. Yes, I know it's crazy, but you can see it from when I did my February market update. We're starting to see home prices come back down with mortgage rates coming back down too. That's a good thing for you, the consumer. So let's go here. So mortgage buyer Freddie Mac reported Thursday that the average benchmark 30-year rate fell 6.42 from 6.6. So it's dropping. The average rate a year ago was 4.42. Yep, it was. I don't think it's going to get back there. Sorry, I don't know what to tell you. That's just kind of what it was. It was that a year ago. We're going to come down here a little bit more. Let's go into here. In 2022, U.S. home sales fell 17% from 2021, the weakest year of home sales since 2014, the biggest annual decline since the housing crisis in 2008. This is what I want you guys to look at. But recently, there's been some good news for those seeking to move. The national median home price has slipped 0.2% from February last year to $363, marking the first annual decline in 13 years. Home prices are coming down. Now, they're not going to drop 30%. It's not going to be back to where it was 3 or 4 years ago. I'm sorry, it's not going to happen. It's just not. So while Freddie's right, and here's what we were talking about in our first article, while the Fed's rate hikes do impact borrowing rates across the board for businesses and families, rates on the 30-year mortgage usually track moves in the 10-year Treasury yield, which lenders use as a guide for pricing loans. Investor expectations for the future, inflation, global demand for U.S. Treasury bonds, and the Federal Reserve with the interest rate can also influence you borrowing for a home. So Treasury years have fluctuated widely since the collapse of the mid-sized banks a couple weeks ago. The 10-year bond falling to 3.47. The 10 yield reached 5.07 before the bank collapses. Here's another thing. For my frugal and very conscious buyers, I love this one. This is very, very good. The rate for the 15-year mortgage, popular with those refinancing their homes, also came down again this week to 5.68 from 5.9. So we have got a lot of stuff going on here in this article. And how does this really impact you, the consumer? What it's going to do for you and what we're seeing right now in the market is that with interest rates starting to come down, we closed a home with a great customer this week. The customer was able to buy down their interest rate, and get below 5. Yeah, buy down their interest rate to get below 5. You might say, Stephen, I've never heard of buying down an interest rate. What is that? Please tell me more. You know what? I would be happy to. So what a buy down on an interest rate is you can ask a seller, or you can pay for it by yourself, to buy down the rate. Meaning you go to your lender and they will straight just buy it down. They will spend so much money and buy the interest rate down to a point that you feel comfortable with. The more you buy it down, the more it's going to cost. But in this instance, we asked for a seller credit to their closing cost. Usually, that closing cost credit would go towards your down payment, your other closing costs, and things like that. We can also use this to buy down the interest rate. So this is a very, very good tool. If you are talking with a mortgage lender, if you are talking with your real estate professional, bring this up. Hey, can we make an offer, have them give us a credit, and then use that to buy down points? They will say, yeah, we can. Let's look into it. You guys need to know these things because it's going to save you money, money, money. And as the interest rates keep coming down, we're going to see more and more people getting in the market. So I tell this to my customers all the time. They say, hey, we're going to wait until spring or summer. You know what's going to happen in spring or summer? Everybody else is going to get in the market too. Do you want to be competing against those people? No, you don't. If you have the ability to move right now and the flexibility to do it, do it. Just do it. Because you don't want to have that competition. You want to be able to go out and say, hey, I'm going to offer you, seller, X amount of money, but I want a credit. And I want a credit so I can buy down my interest rate so you can get into a place that you feel comfortable with. Versus once we get into the spring, and especially the summer here in Florida, there's going to be a lot of people. It happens every year. That's the busiest time. Spend some time, get ahead of the curve so that you can be successful for you and your family. So that was our news and notes here for the day. I hope you guys found this interesting. I hope you found it insightful. If you'd like me to go over anything else, please just throw a comment down below and I'll do my best to help you out. You have a wonderful and safe weekend. Have a great day, Jacksonville.